Good evening and welcome to tonight's webinar, member-only content for ASX Investment Opportunities in Review, 19th of April. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service. If you'd like to know more about that, please contact me on 1300 614 002. The technology we're using tonight is the member area. You can subscribe to it for $1,320 for the year. If you're on your 30-day trial and joining us during tonight's webinar, please make use of the opportunity to give the office a call tomorrow or later in the week, and we're happy to walk you through some of the features of the software and show you how to get the most value out of it. Up on screen there's a chart of the Nasdaq. We're nearing the prior high. Generally, a double top is not something that I'd be particularly concerned about in the market, but given the stretch valuations of the Nasdaq, it's worth just pausing and watching, in particular just to note whether the index stays above the 10-day average or trades below that. As we looked at in last week's recording, we're into the March quarter earnings results coming through from the US. We're seeing the banks report. Whilst the results were very strong, a lot of the good news was priced in, so we haven't yet seen the banks on average tear higher. But certainly this week and next week we start to get into a larger percentage of the S&P 500 companies. Where we see earnings at the moment, I think this is a relevant graph if I just bring up the S&P 500. And this is the backdrop that you stay a little bit mindful of or cautious about. Where are we? Let me... there we go. So the relevance here, you may sort of recall where I've highlighted that where we're tracking is $40 of earnings for a quarter, which is $160 for the year. The market's looking for 2021 earnings to pick up on average another $15 across the course of the year to average around $175. That average sort of ranges between 168 175 for 2021, but where the big pickup is that the market's pricing off is 2022 earnings increasing to $50 a quarter or $200 for the year. So if we go back to that graph of the S&P 500 at $165, which is approximately your $40 per quarter, the S&P was worth 3,000 points. Interest rates were twice what they are today on the 10 years. So a combination of lower interest rates and higher forward expectations for earnings growth is driving this rally. And the first sign that earnings are below market consensus or the market becomes impatient with waiting for anticipated forward earnings growth, the market becomes susceptible to some level of selling. And for that reason, what we want to do is continue to watch whether the market trades above this average or below. When it's below the average, you just need to start having to think about taking some risk off the portfolio a little, and maybe even thinking about hedging, but I'll draw your attention to that when those conditions change. Tonight what I want to do is roll through the ASX Top 100. We'll focus on the stocks under buy conditions. We'll identify the high conviction opportunities and Evolution Mining. So we've seen the gold stocks move higher at the moment. Our preference remains Northern Star, but certainly Evolution, if we have a look from there, it's continued to create higher highs, higher lows. The pullback through here, the algorithms picked up sort of that higher low formation there and the rally's underway. But again, our preference is Northern Star over really any of the other gold stocks. Maybe Northern Star and Gold Roads is order of preference at the moment. Northern Star, the commentary on the blog was to buy the stock sub $10, now pushing $11.50. Stick with that as long as it stays above the average. BlueScope's been a really strong performer off the back of that recent signal there in January. Continues to move higher. The other one that's done well there is Sims Group, which is worth having a look at as well. Fortescue continues with higher highs, so for the moment we're continuing to buy the dip in the iron ore stocks. and Fortescue off that $18. BHP off to that 105 level, now pushing 120. JB Hi-Fi, it's rallied from that low there of 43 to 52, but we're not buying that at the moment. Altium, I started to draw your attention to this on the blog, updated some financials around it. Happy to take another look at this. If we see a slight pullback here, maybe back to around $28, it'd be a buying opportunity for Altium. It is in the model portfolio at the moment. Fisher Paykel, so around that $30-$31 is fair value. As long as the Nasdaq keeps pushing higher, high PE stock like Fisher and Paykel can grind higher as well. So high quality business, but is getting a little expensive. But terrific underlying earnings growth. CBA's in the model portfolio, so it's the preferred bank out of the major, the big four. ResMed performing well off that support. They're at around 23 now, pressing up towards 26, 27, sitting above the moving average. Seek, bit cautious there still, so I think that might be susceptible to a pullback, especially if we see the Nasdaq below the average. Transurban's been the preferred infrastructure play. That's been rallying from $12.50 now up to $14. We continue to hold that. Domino Pizza's performed well off the recent algo signal there at 84, now pushing 106. And just keep an eye on some of these stocks that have a interim red arrow. So again, if you're joining us for the first time, the red box up the top's the sell signal, the greens are the buy, the red and green arrows are interim signals. Amcor, we like this. We think the fundamentals support this. I commented on the blog today that it really is a buy on a pullback to $15. Let it rally a little. Maybe think about selling covered calls. Wesfarmers rallied from sort of 43, now pushing 56, maybe starting to get into an area where it's looking a little bit expensive at the moment. Star Entertainment support around 370, but hard to really have comfort in the current financials, and we look to analyse the upcoming earnings results for Star in a lot more detail. But we're probably not going to see a lot more on that until sort of that August period, or July, August. A2 Milk's a recovery opportunity. It is high risk, so you may want to think about how you'd apply stop losses, and that could be on a break below the average or a break back below $7.60 there for your stop losses. But our thinking there, A2 Milk, high quality asset, will repair those distribution channels into China as international travel recommences, and management obviously look to refocus its distribution channels, and also there may be at some point a takeover consideration for A2 Milk. So we keep that on on our buy list for the time being. REA looks a bit expensive, and again, I'll be cautious on that if the Nasdaq breaks below that average. Soul Pattinson, not doing there at the moment. The index, I'll finish tonight with a review of the XJO. Aurora, we like this, and on a pullback, if we were to see a correction back to around 280, that'd be a buying opportunity for Aurora. Woolworths really has had a reasonable rally from this 37 up to $42, probably back at close to fair value. You could think about selling call options up here to drive extra income. The Endeavour drink spin-off this year remains attractive. Goodman Group, I was running the numbers on this again today and just having a look. So it's now trading below 2% dividend yield, is expecting around 10 to 12% earnings growth, which is maybe a little above average certainly above average for the REIT sector, but also attractive relative to the index. But at 1.8% dividend yield for a real estate investment trust is certainly starting to look a little expensive, but can't argue with the quality and the earnings growth there. Suncorp support here at around this 960 level. CSL, we like this. There is some negative commentary in the market around impact to earnings from the blood plasma collection side of it being impacted from COVID. The company was not particularly, they hadn't upgraded earnings as they expected. The first half result came in above expectations, and the full year result remains unchanged. So I'd expect to see the company actually announce an upgrade to the expected earnings for the second half. It seems a little conservative, them not providing that upgrade at the end of the first half results. So we're willing to be a buyer of CSL on this move where it's found support around 245, but between 250 and 270 CSL's a buy. ALS now under buy conditions there at just above the $9 support level. Atlas not doing their preferred Transurban. Mirvac, this Cleanaway we like, so we've seen them finalise the deal with Suez. It was the lesser of the two options, I guess, that Cleanaway had: a full takeover of Suez Waste Management Australia, or the around $500 million of predominantly New South Wales assets. And it was the second transaction there that was concluded. Still helps to grow the Cleanaway business, but maybe obviously not getting those cost synergy benefits that would have been there if on a full takeover of Suez. The thinking now on Cleanaway is that any pullback to around that 230 to 245 is still a buying opportunity, should continue to move higher over the next year or two. WiseTech not doing their Altium and comes onto the list within those technology stocks that we like. Charter Hall not being there at the moment, but is under buy signals. Aristocrats had a very good run since the buy signals in January and in October. Coles, keep an eye on this. I flagged this on the blog today. It is below the 10-day average. The stochastic's moving lower. If we just see it come back down to maybe around this $15 level, watch for the stochastic to turn higher, and I'd expect to see a renewed push higher in Coles as those short-term momentum indicators turn positive. Cube, watch this. A test between this 275 and 295 level is a buying opportunity for Cube. Link not doing there at the moment. Lendlease, as I've mentioned earlier, good long-term business, but the current fundamentals probably still have some difficult waters for them to navigate. Xero performed extremely well since drawing your attention to this at around that 110 level, now pushing 145. We've mostly started to take profit there. Afterpay not doing there. Cochlea are not doing there at the moment. Preference CSL within the healthcare space. Downer EDI, buy this off the $5 support level, or look at CIMIC. Obviously both fairly high risk businesses just given the nature of infrastructure development projects, but well supported by medium-term dynamics there with increasing government allocation towards infrastructure. Stockland's not doing there at the moment. Computer Share not doing anything there. Oil Search has switched to buy conditions now, so you've got Woodside, Beach and Oil Search all under algorithm buy signals. Keep an eye on Oil Search. As with Woodside, if we see a little bit further sort of softening in the price and then a break above the moving average, that would be the opportune time to take a look at Oil Search. Appen Group not doing there at the moment. Illumina, again, not really, reading through the fundamentals and the earnings forecasts there. Don't see too much that excites me there with Illumina at the moment. Woodside Petroleum, think about buying this on the cross back above the moving average. Keep an eye on the short-term momentum indicators there for a turn higher. Maybe around that $23 level, the stock starts to find buying support. Qantas Airways not doing there at present. Beach under buy conditions, so think about Beach, Woodside or Oil Search. GPT not doing there. Reliance not doing there. Mineral Resources in the second half of this year, if we see a more material pullback, we'll look to buy that, as is the case with Reece. Look for that to shift to buy conditions later this year. Boral, a shift to buy conditions later this year. Newcrest, we continue to stick with these gold names. We are starting to see the early stage of some algorithm sell signals, but we're sticking with these whilst they stay above the 10-day average. James Hardie later this year, look for that to shift to buy signals. APA Group, the downside risks are fairly low, but we are stepping towards reallocating that capital into stocks that are under buy conditions. Nine Entertainment later this year, we'll look at that when it shifts to buy conditions. The regional banks remain undersell. Crown undersell at the moment. Macquarie undersell, looking for that to shift to buy signals later in the year. Ampol, flagged this on the blog. It has generated another sell signal today, but the fundamentals maybe support a slow recovery. Don't expect upside much above $28 there in Ampol, though. ANZ, just be mindful if we see that Nasdaq below the 10-day average, you could start to have a look at the banks, on weakness below the average there as well, and again I'll draw your attention to that on the blog should that play out. South 32 not doing there at the moment. AusNet under sell signals. Westpac again, we'll take a look at that if we see the Nasdaq below the average. ASX, we're sticking with this for the time being, but it has shifted to sell signals, and we're really just holding that based on a yield and franking credit positioning in portfolios. Bank of Queensland, become cautious on that if the Nasdaq trades below that average. Incitec not doing there. Medibank, not much in the way of earnings growth for Medibank. BHP, look for that to switch to buy conditions later this year. Obviously, Rio and Fortescue are the main resource stocks under buy conditions, and the OZR, if you haven't been watching that, that was a resource ETF that switched to buy signals about a month ago. So again, looking at OZR there. Sonic Healthcare, we've taken profit there at around that $36. Next DC now under sell signals. Not being too fond of the fundamentals here. It was one of the better performing stocks in the model portfolio, but not surprised to see it now start to roll over and shift into sell conditions there. Car sales again under sell. So interesting just to see some of these high quality tech stocks now start. Some of the healthcare, some of the tech stocks are starting to shift to algorithm sell signals. So we are seeing a slight increase in the number of stocks now under sell signals. NAB again, if the Nasdaq's below the 10-day average, have a think about NAB on the short side. Ramsay Healthcare, we're sticking with this again just on a dividend basis. We think the downside risks are relatively low, but just draw your attention to the fact that it is under sell signals. Treasuries under sell signals. Challenger, not fond of the fundamentals there. Ryzen, we're avoiding that. That's under sell signals. Insurance Australia, maybe give this the benefit of the doubt that it's forming a troughing pattern here, and maybe at the beginning of a uptrend, but it is difficult to sort of forecast that inflection point in a stock that's been in a downtrend for a couple of years. But around this 450 historically has been a support level. It's a high quality company, and just keep an eye on that for a change in trend where we start to see the early signs of a high low developing. AMP, not doing there, cautious on that. Brambles really tracking sideways, but I wouldn't be surprised to see this deliver a better earnings result that could start to push Brambles a little higher from where it is at the moment. Magellan under sell signals, so another fresh signal there at around that $50. QBE under sell signals. Santos under sell. IGO under sell. Orica under sell conditions. Tabcorp under sell, look for a more meaningful sell-off in Tabcorp. Ansell now under sell conditions, resistance around that $40. Oz Minerals, look for this to switch to buy conditions mid to late this year. It's a high quality company. Copper prices should remain well supported, but any sort of more significant sell-off there in Oz, we'll take a look at that when it switches to buy conditions. Telstra, resistance here at around 350, but has had a very good run from 275, so probably more just running in a bit of profit taking there. Origin had a negative outcome from a court case with Beach. Beach was the beneficiary of that. Origin wears the consequence of higher payments to Beach, and the analysts remain cautious on the retail energy side of it. So we just give that a little bit of space at the moment, and continue to watch the news flow and any updates from the company. Worley under sell conditions, so not doing there at the moment. Vicinity under sell, Centre under sell, and TPG. We've seen the chairman CEO step down. The market's a little bit concerned as to any added liquidity that's put into the market from a potential sell down. But I still think TPG has the opportunity to trade higher over the next 12 to 24 months. And at this stage, we're sticking with TPG. We haven't cut it from portfolios. Just to finish tonight, I will look at the XJO, but I just want to move through a watch list here and share with you some of the stocks that are in my watch list at the moment. So the long Nasdaq, long FTSE 100, but cautious on those if the Nasdaq closes below the average. A couple of ETFs here that have been added for the first time. So these are more sort of global ETFs. TPG, which we've touched on. The Cloud Beta Shares Computing ETF. And I'll draw your attention to these on the blog, but I'm just sharing with you some of the things that have been added into my watch list that now come under the radar. The Van Eyck Vector Video Gaming Sports ETF. Continue to watch that. We'll look for a sell-off in that and a shift to buy signals. Short Nasdaq, more if it crosses below the average. Venturex Resources, a copper development company, a mine over in West Australia. And that's on my watch list, and I'll continue to comment on that based on news flow on the blog and future recordings. Sims, as I mentioned earlier in the recordings, performed well off that recent buy signal there at $12. Clean Tech, just something that I'm watching there. Beacon Lighting, this is delivering good earnings growth and rolling out a global business model there, increasing obviously online sales as many companies are having, but they're really starting to become develop their global footprint. Beacon Lighting. OZR's, that resource ETF I drew your attention to, found support there around that 12.50, 12.60 level, and the stock's rallied $1.40 or so since then. Bega Cheese, we continue to like the fundamentals there. Is getting a little bit expensive, but it's had a terrific rally from that original $4.50 entry level there. Rio, we like, but do think iron ore is maybe getting a little close to resistance at the moment. Gold Roads, we stick with that, especially as long as it's above the average. The CNU China ETF, we're sticking with that, and you may want to have a look at the IZZ ETF. Again, global quality ETF. ResMed we like, as I discussed earlier. Seek, I think a little expensive. Think about that on the short side, on a break in the Nasdaq below that average. The IZZ, so back down here at around $60, the IZZ looks appealing. Amcor I've covered. Kogan back at around $12.50, so we just start keeping an eye on the fundamentals and the news flow and the earnings growth there in Kogan. Asia, so this is just predominantly exposure to the Asia technology stocks. At the moment, one of the Asia tech stocks to have a think about is Alibaba. I think coming into the separation of Ant Financial and the conflict that's existed between Jack Ma and the Chinese government, and some of the issues that have been dealt with there, maybe at around $230, Alibaba's starting to look reasonable value if you're looking for something specific in that Asia technology play. Beta shares, so this is long Nasdaq, it's obviously performed well off that algorithm buy signal there at 28, now pushing 32. Global Dividend Fund, we've taken profit on that at the moment. The Spider S&P 500, obviously that's done well since the signal there at around 450, so we'll look at that on the next buy signal. BBOS is more if you see that Nasdaq below the average. Aurora, we've covered that. Hack again, take a look at this if we see it on the next algorithm buy signal, but it has rallied from around 8 to 870 since we last had that signal. Meridian Energy, CSL we've covered. Pro Medicus has rallied off that support there at 40, now pushing 46. Cleanaway we've covered. I think over the IAA, which is the Asia Top 50, be inclined to look at IZZ or CNU over that for the moment. Coles we've covered. And Cure ETF, I think this is one. So we've been fairly aggressive in buying this today and Friday. We're mindful that we may get a push down to that 59 level, but not expecting it really to break all the way back down to this 52. We think the US biotech sector, there's some names there that are looking a little oversold, which should feed into price support for the Cure ETF. So we've been buyers of that at around this 60 $64-$65 range, and we'll continue to accumulate that. Oil Search I covered earlier, Woodside I've covered. India 50, so this switch to algorithm buy signals. Give it a little more room on the downside. If we saw this down around 46, 47, I'll draw your attention to that on the blog. The miners ETF, Newcrest we covered, APA we've covered, GDX, gold ETF, we've covered that. Global healthcare, so I've taken profit on that. Ampol covered that. And global infrastructure, ASX. Sonic covered. So CIMIC, just continue to watch this. Certainly struggling to get too much momentum on the buy side. But anytime you see this above the moving average there, it might be worth just having a think about a trading opportunity in CIMIC. We do think that maybe in the second half of this year we start to see improving earnings, and we'd expect to see some positioning in that ahead of those earnings results. Just to finish tonight with the XJO. So the index remains above the average. We have still some concerns around the high PE valuations in the Nasdaq, albeit obviously recognise that the technology sector or select technology companies are delivering above average earnings growth. A lot of good news priced into the market. Think back to the starting comments around earnings, and any break below that average in the Nasdaq, we just start to look at things slightly differently, especially in recognition that we're seeing a build-up in sell signals at the moment. But obviously there's still a handful of companies that are under algorithm buy signals, high-quality businesses making higher highs, higher lows, and they're the names that we're focusing on in portfolios. Thank you for listening in. I look forward to speaking again next week.